But if there was ever going to be a moment where Bitcoin truly separated and carved out its own space as a global financial asset, this is the time.
I would say Bitcoin outperforms tech stocks this year for sure, in my view.
Bitcoin has outperformed tech stocks this year. Let's be clear. It's not just that it will. It already has. It just has to continue doing that. And why is that? Well, Bitcoin doesn't have any tariffs. Bitcoin doesn't get hurt from this trade war stuff outside of just like broad liquidity-driven giant sell-offs and things. It's not impacted. And when you're seeing these kind of big macroeconomic, even monetary order pressures and changes, that's not great for equity valuations because US assets are priced at a premium based on kind of dollar recycling and foreign capital flows. All the other countries with their dollar surpluses have to take that money and buy dollar assets. And if that changes, even if these businesses keep growing, and they will, they're great businesses, I believe they'll continue to generate earnings growth and all of these other things, but the valuations could compress by even a moderate amount, would bring the shares down significantly. And Bitcoin just doesn't have that. It doesn't have that risk. And actually, you can make the argument that it would benefit from some of those scenarios.
Yeah, absolutely agree with all of that. Investors are looking at where they can go to become uncorrelated to all the stuff that's happening in the markets today, right? All this talk about tariffs, all this global interaction that's happening, it's really putting investors on edge because you're only ever one press release, one deal found someone important away from your market. Get into these periods where things start to feel stable again, but you know that waiting in the wings is some type of an announcement or some update on the tariff situation or the US versus China that can just shake the core of the markets. And Bitcoin's proven incredibly resilient in that respect. And particularly, Saylor even highlighted this yesterday, and he loves to throw up those slides where you start to focus on what the companies that are investing in Bitcoin are doing relative to the broader markets. And they're beating them by wide margins. He showed 12 months, he showed 3 months, right? Through all these cycles, the things that have had a core alignment to Bitcoin, which has no counterparty risk, have been just amazing outperformers. So I think the rest of the market is waking up to this. And I think you're starting to see that as you watch the price of Bitcoin now start to climb higher and higher, even while people are continuing to talk about all this macro uncertainty and sector-related risk that still exist out there in the market. Bitcoin just marches on.
Yeah. When the S&P 500 hit its current level, like the first time, Bitcoin was at 60,000. So the last time when the S&P got to where we are right now, originally on an all-time high break, Bitcoin was at 60,000. We're now at 97,000. That's how much territory Bitcoin has gained relative to the S&P since this time frame. And that tells you everything. You have been much better off owning Bitcoin.
Yeah, and there's another chart that's been circulating similar to the point Steven has made, which is just Bitcoin relative to QQQ, to the NASDAQ. And I believe that hit an all-time high. So yeah, just relatively speaking, Bitcoin is outperforming the US tech stocks, which is a big deal because those have been the best performing asset class for really the last 20 years. So you really can't ignore that. And I think traditional investors can only ignore it for so long. I think they have to acknowledge what's been happening there.
Performance breeds interest, right? And so when you're watching a market like this that's just been riddled with uncertainty and you keep seeing these blips of green coming from Bitcoin and coming from Bitcoin related equities, you eventually just can't keep ignoring them, right? They eventually have to work their way into your portfolio because you are starting to see them, I'll say the word that no one likes to say a lot, decouple from some of the other traditional equities and the indices that are out there. The longer that this trend continues, and I think most of us are of the mindset that Bitcoin has a really long growth path ahead of it here, and probably a very rapid one, given the types of capital we see entering this market and the types of products that the corporations are issuing into the market. That's one of the most underrated drivers of Bitcoin performance, I think, is the fact that you can take a corporate balance sheet, you can securitize around Bitcoin, and you can bring all this outside capital that would never make its way into Bitcoin, and you can just load it up and bring it into the Bitcoin ecosystem and show the benefits of the unique characteristics that Bitcoin brings to the markets, right? Through that volatility profile that everybody used to focus on stripping out of their equities. And now you're finding not only is it a benefit? It attracts massive liquidity and massive capital into your equity and all the securities that you're able to offer. It's an entire new way to operate as a company. And when you can meet the incentive structures of Wall Street and the types of capital and the types of returns they're trying to generate using all their different unique trading strategies, if you can create all the instruments that tailor to that audience, I think it would be a big mistake to underestimate Bitcoin in the way it's going to perform throughout the rest of this year.
And I think that's the moment, that's the juncture we're sitting at, right? Like, I keep telling this to private clients that if there was ever going to be a time, it's always hard to predict the future, but if there was ever going to be a moment where Bitcoin truly separated and carved out its own space as a global financial asset, this is the time. You can't really get a better setup than this on all level, where you've had all of this maturation, the infrastructure's in place, the political support's in place. There's enough quakes and trembling in the financial system that it makes sense to own something like this. And you have all of these massive companies coming to embrace it with billions of dollars in liquidity. If not now, when? You know, and this is what I think investors, clients, just everyone needs to realize is I think this is one of just the most important moments for Bitcoin in its history. There've been many, but on the other side of this year, I think you could look back and I think where you could be is just in a completely different orientation to Bitcoin among financial capital broadly. I think we get there this year, next year. I really do think it's happening.
I think people are realizing that, one of the most sure places to invest your money is on the counter trade against printing a fiat currency, because they tell you exactly what the plan is. And the plan is to keep devaluing that currency over time. So if you've got these governments that are really trying to maintain, what I'll call price stability, right? Because wages and things haven't kept up with the growth of supply. If you're trying to keep prices stable, you have to play with the supply. It's a lever that you've got. You can work with incentives and lending in the credit markets as well, but the supply ultimately becomes that relief valve. So if you're looking for something that's going to be the exact counter trade to that, what do you want? You want completely inelastic supply. You want something that cannot adjust to demand. And the only thing in that cycle that can give is the price. So I think people are realizing that as long as you just believe that governments aren't going to pull it together and stop printing and devaluing their own currencies, then you want to hold the asset that holds the characteristics that make it the exact counter trade to that entire setup. And you can feel comfortable sitting on that because you know they're going to print.
Exactly. And if you need evidence, just look back through the past 3,000 years of human history. It's inevitable. It happens. There are periods of time where there's a money, several hundred years at a time, where a money is really held stable. Gold denarius in Rome, for instance, in the Roman Empire, 300 years plus had the same amount of silver. And it was the standard for a medium of exchange and savings throughout the empire and around the world, outside of the empire even. And then Nero starts coin clipping and sets Rome on fire. And that was the end of the denarius. And about 150 years later, Roman Empire dies.
Keep in mind that we've got it the best of anywhere in the world here in the United States because we do have the reserve currency. So it's really unique when a lot of this grassroots effort is happening from the citizens that are in the strongest economy in the world. If this is happening and this awareness is happening in the country that has the reserve currency, that is about as stable as it gets in this market, you can just look globally and realize that the rest of the world is going to figure this out at warp speed because they're impacted by this even disproportionately to what we are. And even us sitting here in the US, we're not arrogant enough to say the US dollar can be the global reserve currency forever. We've got an entire history that proves that these things go in cycles. And nobody stays on top forever. So, if you want to look reality in the face and come up with a plan to mitigate that and secure your future, even as the US government, you have to look at one of these true digital decentralized assets that really provides the only place to disrupt you. And you need to look at what your position is on that. And you can either embrace it early and mitigate your downfall and not take the position of arrogance and let yourself just dwindle in relevance in the global stage, or you can embrace it. You can be proactive and forward looking. You can find a way to integrate it into the national strategy, and you can protect yourself long into the future. So it's unavoidable that this becomes a conversation at the nation level. It already is. But it's also unavoidable that they're going to have to act on it. You cannot be so arrogant arrogant as to believe you're above disruption, because that doesn't exist. Nobody is above disruption. It comes for everybody.
Absolutely. This is a kind of monetary history fact that I think was always so interesting to me and doesn't get discussed enough. So if you'll give me a quick tangent here. But so in Europe, for example, in the heyday of gold and silver currency, there was this interesting dynamic that would take place where new coins would be, so merchants would acquire like a physical gold or silver surplus, like the actual metal. And what would happen is there would be gold coins that had the king's seal on it. They were stamped. And these would trade at a slight premium to the raw value of the gold. There was a political sort of premium there. So maybe they would.
It was a maybe trust premium almost.
Yeah, 100%. So let's say they traded at a 5 to 10% premium over like the raw melt value of the gold. And so what would happen is merchants would bring in raw gold that they accrued doing business in other countries, and they would bring it to the royal mint. They would pay a small fee to the mint, and they would have it all stamped out and be profitable. And what this created was the system where you had an inside option and an outside option. So as long as the system's going and the king is behaving well and everything is right in the kingdom, you want to hold the political currency. You want to hold the kind of stamped version. But because of the nature of gold, you always had something called an outside option. So if the kingdom's descending into chaos and everything's bad, that premium would go away, perhaps even reverse. And then people actually take those coins, they melt them down, and they take the raw thing out. And why this is interesting is because for all of human history, there was the inside money and the outside money. And people always had the right to exit, in a sense. They could always take monetary value and exit the political system. Now, we haven't had that in the modern world. And that's how I think about Bitcoin existing at the same time as fiat, which it will do for a while. There's going to be a long period of coexistence. And I see Bitcoin as reintroducing the outside option, and that people in our economic system now have a legitimate ability to say, hey, I'm going to convert some of my king's money into the outside money. And this provides a counterbalance. It provides something very useful to people. And that's really what I see Bitcoin bringing in the next 10 years.
So you wouldn't call gold outside money?
It's too cumbersome. It's just
because it can't be used as it's besides sitting in a vault as savings, you can't use it otherwise.
Yeah, I think you really can't overestimate the profound innovation that was the utility in the ease of use and verification in Bitcoin. People talk about this all the time. It's not a new statement for me, but I really think it's just we live in such a digital and interconnected world, and it's just nigh impossible to use gold in that way at scale. But Bitcoin gets you around the use problems and also like liquidity problems. Like you could buy the gold ETF with $10 billion, but good luck trying to buy physical gold.
Yeah, that's not gold. That's still effectively dollars if it's not settled in gold.
Yeah.
And Brady, I would say my personal view is gold is outside money, but it's the outside money that had a chance to be, it was the foundation of the monetary system for a long time. Its fatal flaws were exposed. Like that already played out. There's a reason why it was removed as the base layer. There's a reason why it could be removed as the base layer. I have to show that this is the Satoshi Papers by Natalie Smolenski. I'll read one thing about it. It's exactly what Stephen was talking about. I haven't really cracked into this yet, but the book is an open exchange of ideas among scholars about the relationship between money and state in a post-Bitcoin world. So it really gets into the topics that Stephen is bringing up. So I just wanted to share that. If you're interested in this whole history of money from an anthropological perspective, Natalie Smolenski, great person to follow. Her book, I'm excited to get into it. And I guess just one other point on the gold thing Stephen brought up. Even the quote unquote inside money that Stephen referenced, it was still very tied to gold, right? Like most of the time, the king would be saying, this gold coin has this much gold or this much silver in it. Were there periods of time where they deviated from that? Mostly during wars and crisis periods? Yes, sure. But there was even the inside money had a real world commodity link. The pure fiat system where the inside money truly is just this unit that the government says it's this many units. There's no link to it. That's only been a thing for 50 odd years. And I do find it interesting that the history of money has been this back and forth between more elastic forms of money during periods of war and crisis typically, but they don't last forever. There's a move back towards some sort of inelastic money. And obviously, I believe Bitcoin is going to be this major move towards not only an inelastic money, but a non-state money. So just some additional color to add to what Stephen was saying.
Absolutely. Love it, man. And I think there's a very interesting landscape there on just how the Bitcoin system coexists with what we've got now, because there's going to be a long transition period. Even if you think it's going to that, it could be, you could spend hours on it.
This is why I think it's so easy if you make that shift in your mind and you just acknowledge Bitcoin as a commodity and it stays really non-threatening to the US dollar, right? Then it becomes very safe for other institutions and other nations to start talking about, because I think as a medium of exchange, because of the complexity of the rails that are already in place, the dollar's got a really long runway ahead of it. It may not serve as a reserve asset for as long. That I could see shifting over to Bitcoin. But I think as the unit of account for a while and as the medium of exchange, it's probably still got many decades in front of it. So it's not that these two things have to be completely at odds all the time. At some point, there's a natural evolution in the way people think about value and what they place value on. And I think because of all the recent events globally, people are starting to place that value on true decentralization. They want things that are just out of the control of these centralized organizations, and that's where they're going to park their value and store the value of their efforts, right, from their jobs. They're going to opt out of that system, but they're going to continue to transact within those confines that we have built out today. They don't have to be at odds yet, for sure, but in the value discussion, there's a clear winner here.
100%.